Hello and welcome to Real Estate. I'm Saloni Shukla. It is India's biggest investment market, and through this show, we look to empower you to invest wisely in real estate. Over the coming weeks and months, this show will be your most definitive guide into the world of property investments. So let's have a look at what we have for you on the show today. Chennai, the gateway to South India, is slowly picking up pace and beating its western and northern peers. So should you look at Chennai for your real estate investment needs? We find out in our special segment, The Top Pick. As more and more developers and home buyers flock to the southern cities, we tell you why it is a better option to bet your money on Bangalore, Chennai and Hyderabad. Doubtful about how to pay TDS on a new property you are buying? We decode TDS on property transactions in our special segment, Did You Know? And like always, we answer all your queries in our special segment, Ask Real Estate. But first up, let's take a look at what made news in real estate this week. In a move that will boost foreign direct investment in real estate, the government is planning on allowing FDI for purchase of agricultural land for construction development projects. Billionaire Ajay Piramal's real estate-focused private equity fund, India REIT, is in the fray to acquire stake in two projects developed by Mumbai-based realty company Vardhaman Developers. Jewelry retailer Joya Lucas plans foray into real estate to launch a high-end residential project with an investment of 300 crore rupees. All right, it's time to tell you the top pick of the week. Serving an important administrative and economic center for many centuries, Chennai has seen property prices accelerate as much as 25% in the last 2 years. In fact, the much sought-after corridors of central Chennai have seen rise in demand due to amplified interest from automobile and IT companies in the last 1 year. Sapna Dhanwani traveled to the southern city to tap investment opportunities and gives you a lowdown of the most talked about luxury projects in this southern city. Take a look.
Fast developing infrastructure, incoming of automobile makers and IT parks have worked greatly for this quiet southern capital. Chennai, formerly known as Madras, has come a long way in the last 5 years. The city that was majorly occupied by inmates of the land has now attracted home buyers, NRIs and corporates from around the world alike. Although prices are now cooling off the highs they cracked a few months back, the investment and development potential remains brawny. It's not a wonder that Chennai has performed better than the much-touted Mumbai and NCR market in the last 1 year. Data according to research firm PropTiger.com shows residential property prices have shot up by nearly 8% in the last 6 months, whereas prices in Mumbai and NCR have remained more or less stable. The city has attracted developers from across the country to build homes in this region. The country's largest developer, DLF, along with Hiranandani, Godrej Properties and Bangalore-based Puravankara have set up base in the southern capital. It's no wonder that Chennai has debuted on the top 25 investment destinations in Asia Pacific, according to a recent Emerging Trends in Real Estate 2014 report. What could be seen as a little spoiler is that prices in the most established locations like Nungambakam, Arepuram, Post Garden and Boats Club have now started to cool off, but prices on the old Mahabalipuram Road and East Coast Road are still holding on pretty strong. Talking about Nungambakam, the region has seen prices escalate as much as 14%. This region is known to be one of the most posh locations in central Chennai. Moving on, Post Garden, located in Alvarpet, has seen a jump of 13% in its residential property prices. This location also houses the Tamil Nadu Chief Minister's home. Situated about 9 kilometers from central Chennai, Besant Nagar is the best place if you're looking for a home overlooking the blue sea. Prices in this region have shot up by nearly 15% in the last 1 year. According to data from research firm IndiaProperty.com, property prices on the OMR road have shot up by 55% in the last 1 year. This place is located about 40 kilometers from Chennai and is on the way to Pondicherry. The parallel road to OMR is the East Coast Road. The ECR stretches along the eastern coast, overlooking the Bay of Bengal, located about 15 kilometers from Chennai. The region of Kovalam on ECR is witnessing the development of a super luxury high-rise and villa project. The property is in the price range of 3 to 7 crore rupees for a unit and solely caters to buyers seeking a lifestyle product. The prices in this region have shot up by 20% in the last 12 months.
Tamil Nadu as a state, like Karnataka, its neighbor, has very good potential traction, and the demand for luxury and super premium products is very high in Chennai. I think what we're building next to the Presidency Club was sold out, and therefore going ahead with development, we feel that we would be able to replicate the success of our premium products, whether it is in Gurgaon or whether it is in other cities. But Chennai would be definitely a showcase for the luxury segment that we provide.
To give you a low of the most sought-after projects in the region, it goes without saying that villas on Besant Nagar have been on everyone's mind for the longest time. Overlooking the Elliott's Beach, this place is a treat to the eyes every evening. Villas in this region are likely to cost you anywhere between 10 to 12 crore rupees. The locality is one of the most peaceful and green spaces in Chennai. Casa Grande Pavilion, known as the largest villa community, is located on the old Mahabalipuram road. This place is surrounded by IT parks and provides 330 beach homes. The project not only has the usual gyms, tennis court and jacuzzi, but also has an indoor skating rink, a barbecue counter and ATMs. DLF Commander's Court, located in Egmore, is situated well within the city. A 3 BHK in this project is likely to cost you 6 to 7 crore rupees.
Apart from these high-end luxury projects, a slew of residential activity can be noticed in the city. Almost every lane has a new apartment coming up, be it luxury or affordable housing. Chennai has a lot to offer. Taking cues from its neighbors like Hyderabad and Bangalore, Chennai is going to be what investors are going to be talking about in the coming year. What will attract you to this place is not just the returns that it has to offer, but the value for money that it has to deliver.
Let us take a look at how prices in several localities of Chennai have fared in the last few years. Sapna Dhanwani joins us with the heat map.
Well, Saloni, the quiet South Indian city of Chennai is finally starting to see some activity as far as residential property prices are concerned. Talking about prominent locations, Nungambakkam has seen a price appreciation of 14% in the last 1 year. Prices are currently hovering between the 9,500 to 14,000 per square feet mark. Taking a look at one of the posh locations in the city, Alwarpet has seen a jump of about 13% in the last 1 year. Prices in this region are currently hovering between the 14,000 to 20,000 per square feet mark. Homes along the beach side are currently becoming very famous, with people living in Tamil Nadu and NRIs alike. Homes along the Besant Nagar beach have risen about 15% on a year-on-year basis. Prices in this region are currently hovering between the 14,000 to 17,000 per square feet mark. However, what will be an unbelievable price appreciation is along the old Mahabalipuram road, or most commonly known as the OMR. The prices in this region have shot up about 55% in a matter of last 12 months. Prices in this region are currently hovering between the 6,500 to 7,000 per square foot mark. What is known as the parallel road is the East Coast Road, or the ECR. Prices in this region have shot up about 20% in the last 1 year. Currently, the prices are ranging around 5,000 to 7,000 per square feet mark in this region. So that's how the chart for Chennai is looking like currently. Saloni, back to you.
To talk more on whether you should invest in Chennai, we have with us Rohit Kumar, Head of Research at DTZ, joining us from Gurgaon. Rohit, thank you for joining us. My first question to you would be, we've seen a lot of activity as far as the residential market in Chennai is concerned. Is it some place that you would recommend to investors and home buyers?
It is important to note that Chennai and to a large extent Bangalore as well are two end-user driven markets, and hence they are very, very stable with respect to appreciation of capital values and appreciation of rental values as well. So the yield that you can command in that particular town in Chennai and Bangalore is much better than what you can get in a Delhi NCR or a Mumbai.
Let's get your view on the luxury market as well. We've seen a luxury market in Mumbai and NCR slackening. What is your view as far as the luxury market in Chennai is concerned? Are there several projects which buyers can go out for?
Yeah, Nungambakkam is another area where you can expect decent amount of supply. The capital values ranges between 25,000 square feet to 33,000 square feet in that particular area. It's a good investment option as compared to Post Garden, wherein you have restricted supply. Nungambakkam would be really leading the way in terms of supply for ultra-luxury villas and apartments.
As far as the price upside is concerned, what sort of price upside are you expecting in the Chennai market?
This is a very stable market as compared to Delhi NCR and Mumbai. If you're looking at Chennai as an investment option, you could easily get a 10 to 12% appreciation in your capital value per annum, so to speak.
All right, Rohit, stay with us. We will come back to you for more views. It is time for a short break to get our expert opinion on your property matters. Feel free to call us or email us. Details coming up on the screen. On the other side, we tell you why the real estate market in southern India is giving Mumbai and the National Capital Region a run for its money. More on that in just a bit. Keep watching Real Estate. Welcome back. You're watching Real Estate. Amid a real estate gloom across various cities like the National Capital Region, Mumbai and Pune, the cities down south have emerged as the next realty hotspot, with Chennai outshining all major cities in terms of sales and Hyderabad seeing a 10% surge in residential demand. Developers and home buyers alike are heading to this comparatively affordable market. Prerna Barua tells you why the southern cities have performed better compared to other major metro cities.
In contrast to the volatility in residential property market witnessed by major cities like NCR, Mumbai or Pune over the last few years, southern cities like Chennai, Hyderabad and Bangalore have seen a steady growth in terms of prices and demand from end users. According to Lias's forecast, the overall sales in all cities have declined 7% in Q2 FY14. But with the exception of Chennai, other cities like Mumbai, NCR and Pune have seen significant drop in sales, with Mumbai and Pune seeing the maximum slowdown.
In the south, there is a huge demand even for completed projects, and therefore you see as you go ahead towards completion, prices rise and end up, if you made a good product, at double or more than double the price at its launch.
The real estate gem of South India, Chennai has been one of the better performers in the real estate space. Surge in industrial activity has driven demand for housing in the city. In fact, demand in the residential market can also be attributed to the high demand from NRI investors looking to invest in the city for the long term. According to a Cushman and Wakefield report, Chennai's residential demand is expected to be nearly 314,000 units in the mid-range and high-end categories in the next 5 years. Of the total demand in both residential and commercial segments, nearly 90% of the additional demand is expected to be in the middle-income group category. Also, at a time when developers are burdened with huge debt pile and rise in inventory, the Chennai market has comparatively lesser unsold stock and currently stands at 62 million square feet, which will take at least 2 years to clear. NCR has the highest inventory pile up at an alarming 290 million square feet and will take almost 4 years to clear. Even MMR, with a pile of unsold inventory and subdued pace of sales, has witnessed a surge in inventory at 150 million square feet, which will take at least 5 years to clear. Chennai also beats other cities in terms of new supply amid a stagnant market, with only Chennai and Hyderabad witnessing a steady supply of homes. Cities such as NCR, Mumbai and Pune have recorded a significant drop in new supply.
Chennai so far has been surging, and largely because the supply is surging. Chennai has been a market where it used to be a territory, dominated by small developers. They're developers where they are bringing, smaller size projects, and those are the one which used to dominate the market. But we see that the large projects started coming. So across the region, whether it's outer area or inside area, we see the supplies being surging.
India's Silicon Valley, Bangalore, after a near 4-year lull, is enjoying a resurgence in the high-end residential market, fueled by a newfound demand on the city's outskirts. Bangalore, being the third largest hub for the high net worth individuals, has seen an increase in demand for luxury residential apartments. A recent JLL report estimated that the total value of ultra-luxury projects in Bangalore is at 6,000 crore rupees. Prices of residential projects in Bangalore have also seen a 21% jump at 5,200 rupees per square foot versus 4,300 rupees per square foot the previous year. On the other hand, Hyderabad has seen slight surge in sales over the last 1 year. While capital values have dropped over the years, rentals have witnessed a slow but steady increase. The yield from residential property in all residential locations of Hyderabad has been on an upward trajectory, varying in the range of 3 to 5%. Residential real estate in Hyderabad is one of the most attractive destinations with an existing weight capital value at 3,000 rupees per square foot. Residential prices have also accelerated 10% during the year. Experts also indicate that a price upside is inevitable with a go-ahead for those looking to invest for a 2 to 3 year horizon. The availability of high-end villas and bungalows at affordable rates as compared to other cities like Mumbai and NCR have also led to this increasing appetite for premium projects in the southern cities. Also, demand in residential projects may be the rosiest lure for developers. Home buyers also tend to benefit from this increasing capital values. So those looking to make the plunge into real estate should definitely head south.
Rule regarding deduction of 1% TDS on properties valued above 50 lakh rupees came into force from June this year. But even after 6 months, several buyers still remain unclear as there's not enough clarity about how a tax deducted at source is implemented. Real Estate explains you how TDS will apply on property deals.
From June this year, any individual who purchases immovable property other than agricultural land will have to deduct 1% tax at source of the amount paid to the seller, provided the amount is more than 50 lakh rupees. The onus of deducting the tax is on the buyer of the property at the time of crediting the amount to the seller. Immovable property includes assets such as a house, commercial property and land purchased for commercial or residential purposes. While the rate of TDS on transactions of immovable property is 1%, in case the seller has not disclosed his PAN number, it would be 20%. As per the norms, the buyer can make the payment of the TDS online or through check or demand draft within 7 days from the end of the month in which the deduction is made. The buyer will issue the TDS certificate, which is Form 16B, to the seller within 15 days from the due date of payment of taxes. If the property is financed through a bank loan, the buyer will have to ensure that the bank deducts the tax before disbursing the loan to the seller. There is a penal provision in case of non-compliance as well. According to Section 201, in case an assessee fails to comply with the procedural guidelines of TDS provisions, the assessee will be treated as a defaulter. And according to Section 201(1)(a), in case of failure to deduct the tax or short deduction of TDS, an interest of 1% will be levied for every month on the amount of tax that will be applicable from the date on which tax was deductible to the date on which the same is deducted. In case the buyer fails to deposit wholly or partly the tax deducted, then an interest rate of 1.5% every month will be levied or part of the month from the date of deduction till the date of actual payment.
Time for a short break. To get our expert opinion on your property matters, feel free to call us or email us. Details coming up on the screen. After the break, we take up all your property related questions in our special segment, Ask Real Estate. Stay tuned. Welcome back. You're watching Real Estate. Rohit, Kumar from DTZ still with me. It's time to take up some of your real estate questions. Let's welcome our first viewer, Kunal Bhagat, who's joining us on the phone line from Chennai. Kunal, tell us, how can we help you?
Yeah, my question is, actually I'm looking to buy a villa around the ECR area. Can you please suggest me good projects along that place within 10 crores, like my budget is 10 crores.
Rohit, you heard him. He wants to invest around the ECR area. His budget is around 10 crore rupees. What would you recommend?
Yeah, there are a couple of projects along that particular area. In that price bracket, in that budget, you can easily pick up two villas of 5,000 square feet each in Prestige Silver Springs. Then you have, of course, Reflections by Olympia. And of course, there is Monthly Signature. Now, all these projects are being, they're all under construction and they're due in the next 2 to 3 years. So if you have that kind of a horizon, and if you're looking at picking up decent amount of villas or luxury space, luxury apartments in that area, these couple of options that I just mentioned could be good bets.
All right, now let's move on to our second viewer, Priya Goswami, who's joining us on the phone line from Hyderabad. Tell us, Priya, what is your question?
I am actually looking to invest in DLF Garden City, Hyderabad. And I just want to know, is it a good option and how much price appreciation can I expect?
Rohit, you heard her. She wants to invest in DLF Garden City in Hyderabad. Is it a good enough project?
With respect to the DLF Garden City in Hyderabad, it's a good project. Any project by DLF has to be of that particular quality. The only issue could be the distance from the airport, which is around 20 kilometers, and this is a plotted development. So if you're looking at a long horizon of about 3 to 5 years, wherein you expect a return of a minimum 15 to 20%, this could be a good bet.
All right, with that, it's a wrap on the show. Always remember, real estate can be one of the most profitable investments only if it's managed with reasonable care. And we will help you make that wise decision. We will be back same time next week with more interesting investment strategies and ideas. But before we go, we leave you with a glimpse of one of the most desired homes in the United States of America. Keep watching.
It is time for today's Bloomberg big number. That number, $6.5 million. That's the price tag for the real-life penthouse featuring the upcoming Martin Scorsese movie, The Wolf of Wall Street. It's the real version of Leonardo DiCaprio's movie apartment located at 300 East 55th Street, and it's currently on the market. It features a 200-square-foot terrace, incredible views of the city, 3 bedrooms, 2,500 square feet all in, unless you're planning to commit securities fraud. It may be out of your price range, but I think you're allowed, if you buy this place, to dangle someone over the ledge.
Oh, no.
Maybe not.